Mining community. Hope we're all doing well. So we've got another episode, and today we have a returning guest that appeared back in June 2019, which is episode 31. So I do encourage you to go back to that episode. And so we have Steve Poulton, who's the founder of Altus Strategies, who are a project and royalty generator in the mining sector, with a focus on Africa and creating value by making mineral discoveries across multiple licenses. They're listed both on the London and Toronto stock exchanges. And we're going to get an update from Steve on what they've been doing since we last spoke, which is 2.5 years ago, and discuss what projects they've been involved in, plus a lot more. So that's welcome, Steve, to the podcast. How you doing, Steve?
Thanks, Rob. Thanks for the introduction. Yep, doing really well. Hope you're doing well. It's been a busy 2.5 years. It's been a long time, and it's good to be back on your podcast.
Yes, certainly, and appreciate your time. I know you've been pretty busy recently, so wondered if you can just give us a brief background about yourself. Obviously, if people want to know a little bit more about you, they can refer back to the episode that we did before back in June 2019. So you can just give us a quick snapshot of your background for those that are listening for the first time.
Yeah, absolutely. Thanks, Rob. Yeah, I'll just sort of quickly jump in and semi-correct the intro you gave me, which is to say I was a co-founder of Altus, not the pure founder, a founder. Founded the company with Matthew Granger and David Netherway back in 2007, and it's really been I think I guess it's a function of the mining sector. Very few companies are set up by one individual. It is a very collegiate industry, and you need many different skill types and a very strong network to make successful enterprises and to finance them in the first instance, and that requires different people. So that was a co-founder situation, as we have a number of all of the companies we've been involved with. So I'm a geologist by background, graduating in 1997, I think it was, and then I went on to Camborne School of Mines, did a mining geology degree, and followed that up by joining one of the very few listed companies back then in the junior resource space in West Africa, in Liberia and Sierra Leone and Guinea, which was going through a troubled time, a sort of a marauding nomadic civil war across those three entities, which was terrible. Gold price was in the doldrums, and the company was listed in London and in Canada. Had to be very innovative, very entrepreneurial to maintain its licenses, to be in business, and to ultimately be successful. And it was great grounding in the mining sector, really, and specifically in the junior end of how to run companies and make sure they're successful. I got some really good tutorship from people like Guy Pass and Tom Elder, who are really leaders in our industry, and they taught me a huge amount. We quickly set up a company, co-founded a company with Kerem Senna of Ariana Resources, and also Matt Granger in 2002. We was Ariana. We acquired a gold asset in Turkey from Newmont Mining. As I say, the gold price was probably around $400 an ounce then. We thought it was going to double, and it was a great acquisition opportunity. Took it to the London market 2005. It's quite a challenging market after the 7/7 atrocities. And that company's gone on to build the Sindigi gold mine under Kerem's stewardship. It's been a great success, and it's going to go even further, I'm sure. In 2004, we created a little business called African Aura, which we listed in Canada just at the time of the financial crisis in 2008. So another difficult market. It's rarely easy in the junior exploration sector, but we managed to raise some capital, and through a various series of transactions, we created a much larger entity, which ultimately divested into Afero and Aureus, two companies, one in gold, one in iron ore. The iron ore business was taken out, and the gold business built the New Liberty gold mine. So the iron business was a particularly successful transaction. We discovered an asset in Cameroon called Nkoot, and it was put together with an asset called Putu in Liberia that Sebastel bought into. So that was a great success. And when Altus was launched in 2007, we were really trying to bring all of these people in our network and that we'd met, and that people could perhaps finance us, and what we learned about the risks of doing exploration and how to make sure your shareholders aren't overly exposed to them. And Altus was, we thought, the perfect vehicle for that, a focus on Africa where you can make discoveries near to surface, which means they're faster. You don't make so many mistakes. You can find your mistakes quicker and move on. And focusing on multiple jurisdictions simultaneously. So multiple jurisdictions in terms of political risk, but also geological terrains in terms of the types of deposits you're after. So what we felt was the perfect business model. And then the world fell apart in the financial crisis as we were seeing it firsthand through African Aura. And we pivoted slightly, built a natural resources fund called Altus Resource Capital, took that to the London market. We raised about $50 million. We had some really high class investors in that company like Barings Bank, British Airways Pensioners, Bailey Gifford, Invesco. Really good names backing the junior resource equity thesis that we had. And we thought the gold price would double. And we were right the first time it did. It moved from 400 to 1,000. And then we were right again. It moved from 1,000 to basically 2,000. And the junior resource space did particularly well. And in 2011 and 12, we recycled some of the money we'd made from the asset management business back into our original thesis of junior exploration in Africa with a diversified approach and doing transactions, which is really what we're doing today at Altus. We listed the company in 2017 in London, and then we took it to the TSX in 2018. We acquired a company which had some assets in Mali at that time. And then in 2020, we were delighted to welcome La Mancha as a strategic investor to the company. They've acquired a 35% stake. Effectively, it's the family office of the Sawaris. It's a very well-known, well-regarded Egyptian family and big shareholders in Endeavour Mining and formerly in Golden Star, which is in the process of being taken out. They've bought 35%. Their CEO, Karim Nazar, has joined our board. And really, we were building up to this transaction. We were very excited about it. We could see that it would be transformational for the business. Effectively, they had recognized what we had saw and what we had built in all of those years, not all of them so easy. And then, unfortunately, the coronavirus came along and sucked all of the energy out of the market for us and the transaction. But the gold price started to do quite well, and we got a little bit of recognition. And so during the last 2 years, what we've been doing is really building out our royalty business. We've been continuing our activities in Mali, and our royalty business has grown from strength to strength. So I can talk about that a little bit more. I realize that's quite a long introduction, but hopefully it gives you a bit of background of Altus and myself personally.
Yeah, no worries. So what changes have sort of happened within the business since we last spoke, which is obviously 2.5 years ago? And obviously we've had obviously disruption for most of the part of that, but obviously business still moves on. And yeah, just wondering if you can tell us a little bit about some of the changes that have happened.
Yeah, absolutely. I mean, the Altus itself has probably doubled in size during these last 2 years. And we have found new and innovative ways to work even harder and be even more productive, ironically, a little bit. There's two facets to that. On the one side, it's because we've pursued our royalty acquisition strategy quite aggressively. We acquired an interest in the Caserones copper mine in Chile. It's a very large copper deposit, and we acquired it in a strategic joint venture, effectively with EMX Royalties, who are TSX listed, and the chairman of EMX, Michael Wynn, happens to sit on our board, which made us doing an SPV together with them very easy and straightforward. It was a great transaction. It was a $34 million deal, and just before Christmas, we discussed how we had closed a deal with Newcrest Mining for $24 million, acquiring a portfolio of royalties in Ivory Coast and Australia primarily. And we did that deal with a group called Alpha Stream, effectively a mirror of the EMX type of deal, where we worked to create a strategic partnership with them to acquire those assets. So we've done that on that side of the balance sheet. And then on the exploration side of things, the coronavirus obviously had a big impact in terms of travel and the ability for our UK team expats to get out there. But one of the great strengths of Altus has been our ability and desire, passion, if you like, to train up geologists across the countries we're working in, from the universities upwards. And we were able to mobilize our teams across Africa very successfully. And although we weren't able to directly go ourselves to the projects, we were able to continue to work in Morocco, in Mali, and most recently in Egypt, and a little bit before that in Ethiopia, because of that skill set that we had and the trust and systems that we have in place, which allowed us to execute our program. So we've continued to work. We've been quite successful, I would say, on a number of fronts across our sort of royalty generation portfolio. Done a few transactions. We announced yesterday a deal with Marvel Gold, an ASX-listed company, where we'll be receiving back 100% interest in our Lecampfla gold deposit, and they'll be advancing the Tabakroli gold deposit, where we have a very strong JV with them. It's now over 1 million ounces and that's one development we've had since we last spoke. Our Diba Gold project has been really accelerated with a mineral resource and a preliminary economic assessment undertaken, and there's some eyes now looking at that in real interest because it's located within eyeshot of a 13 million ounce gold deposit called Sadiola. So it's a really well located asset. And then I guess the big news, keeping it back for last, is perhaps what we've done in Egypt. Now, our major shareholder having an Egyptian background is important, of course, but also we've managed to submit applications in pretty much the first formal international bid round for licenses in Egypt, specifically the eastern desert of Egypt. It's very prospective geology, and we've been quite successful. We've acquired 4 project areas, about 1,500 square kilometers, and we're now one of the largest landholders in Egypt alongside Centamin, Barrick, and B2 Gold. And I'm hopeful that we'll receive further licenses in due course. Initial reconnaissance that we've done on those properties are showing us very compelling indications of hard rock gold deposits being on those licenses. Now, we've got a lot of work to do in Egypt. As a team, we're exceptionally excited by the opportunity that it presents. So bringing that all full circle, I guess, since we last spoke, we're now in a situation where we've got projections of $6 to $10 million of after-tax cash flow per year coming in from our royalty portfolio. We are much further along in terms of where we take the Diba Gold deposit and building a big resource there and potentially monetizing that in due course. And we now have Egypt coming up on the rails as a very big deal for our shareholders. And obviously, Centamin was a huge success in London and to an extent in Canada. And I would like to think that if we're successful with Mother Nature and we do a good job on the technical side, we'll be able to replicate what they've done. I'm convinced that there's a number of very large world-class gold deposits to be discovered in Egypt. And I'm more than hopeful that we have potentially the opportunity, let's say, to have 1 or 2 of those snared within our current licenses and maybe the new licenses we'll get. So quite busy in the last 2 years.
Yeah, certainly. So you've packed a lot in those 2.5 years. So wondering if you give us a quick update on the actual royalty space, sort of globally, and probably more so with the jurisdictions that you're involved in, mainly, I suppose, mainly Africa.
Yeah, I mean, Africa's probably been a little bit quieter on the royalty side of things, and that's probably speaks to the fact that maybe 80, 90%, potentially more of the royalty industry is North American based. And there are reasons why North American investors, North American executives who are managing, leading, creating, running royalty companies wouldn't necessarily look at Africa in the first instance. It's not next door to them. They've got fantastic mining industries in North America and South America through which you can build a very decent royalty portfolios and companies and give your shareholders lower perceived political risk. And so Africa is a little fallen between stools to an extent. There's been some activity, but not a huge amount. And I guess we're one of the few, if only, royalty generators in Africa. We're convinced that the opportunities in Africa are huge. I'd like to think that during the course of the year, we will undertake further royalty deals on cash paying assets, let's say, in Africa over the course of this year. We'll have to see whether that comes to pass, but very convinced that is the direction of travel. But globally, I guess you're going to a situation where the royalties, the owners of royalties, you had people recognizing that they were tucked away in cupboards and hidden away in the back of balance sheets, and really people didn't understand them or value them greatly, but they suddenly appreciated there was more of a market for those pieces of paper, those agreements. And sometimes they are on early stage assets, so effective they're options, and sometimes they are on advanced or cash paying assets, in which they're simply dividend paying pieces of paper. And there's a market for these, and a number of royalty companies sprung up and started to bid for these royalties. And I guess you could say the first flush or even the second flush has occurred. Those people that didn't realize them and that they had these royalties have now put them on the market and they've been bought out. So you could say that the pool of available royalties has shrunk, but it's not shrunk greatly. You're still seeing quite a few transactions and opportunities. And for us with Altus, with our appetite for Africa and emerging markets, markets. We're perhaps able to move on deals that other royalty companies are unable to. And you could say that our acquisition of the Newcrest portfolio, where a large proportion of the royalty value is in Ivory Coast on the Bonikro gold mine. Many royalty companies wouldn't necessarily give that fair value or be able to bid on it in the first instance. And we were able to move on that. And alongside that, we got 2 cash-paying royalties in Australia and 21 other assets in Australia. So a wonderful transaction for us. So royalty companies that have an edge, as I'd like to think we do in certain cases, we'll continue to do transactions. But I guess where I'm going with this is that the theme for the next 2 to 3 years is probably more along lines of consolidation. So royalty companies acquiring royalties through corporate activity. And you saw a bit of that to the back end of last year, Gold Royalty and Abitibi and Golden Valley coming together to create a sort of larger royalty entity. And more recently, that Gold Royalty is making a move on elemental royalties, which is a sign of things to come. I'm convinced about that. There is huge value, latent value in a lot of these royalty companies, and I'm hopeful in due course that Altus will play a part in that consolidation, in that M&A, because so long as it's accretive for shareholders, having a lower cost of capital is a good thing. So that's really, I guess, the key theme of the last couple of years in terms of the royalty space. A depleting number of good quality royalties with more focus on M&A. And as we learned when we did our deal with EMX on the Caserones copper mine, if you're able to team up with another royalty company, you can not only share your acquisition costs, which are not insubstantial, but it allows you to put a bigger offer on the table. And if you're able to bid more, you're able to access higher quality royalties. So the quality of the royalty does go up the more you're paying for it. And therefore, if you're able to partner with another group, you can actually punch above your weight. And that's what we've done with EMX, and that's what we've done with AlphaStream. And I think our shareholders can hope for us to see us do more of that in the course of 2022.
Obviously involved in quite a few different projects. I wondered if you can just give us a bit of a highlight on one of the projects that you're working on in a little bit more detail.
Sure. I mean, we do have a lot of projects. I think we've now got 61 assets in the company, royalties and projects. And the one that may be capturing the market's attention right now, because it's the most advanced, will be our Diba Gold project in Western Mali. As I say, we announced yesterday that we're acquiring back the Lekampfla asset, which is just 5 kilometers away from Diba. So really forms a bit of a mining camp or mining complex between Diba and Lekampfla. And Lekampfla is interesting. It's earlier stage, but it's had sort of reports of 5 to 10,000 artisanal gold miners on it. It's 6 kilometers away from 2 pits that amount to about 2 million ounces of gold that were operated previously by Anglo Gold. And so it's a very highly prospective license in exactly the right terrain, and it's been covered in artisanal gold workings. It's got lots of drilling that's gone into it and delivered some very, very good results. And we're convinced there'll be ounces to come out of that license that will then bolster the Diba Gold project, where we've actually got a drill rig right now turning, and we'll be updating the market shortly on results from that work that we're doing there as they're coming in. We've got about a 500,000 ounce gold resource there. Most of that, let's say 50% of that is in oxides. We're drilling a new area called the Diba Northwest prospect. I'm quite hopeful about that and maybe generating some further resources from it. And you can see let's say the shareholders can see a way to maybe having a 1 million ounce target for the combined Diba and Lekampfla gold properties in due course. And we'll update the mineral resource estimate when this work is done. We'll update the preliminary economic assessment, and we'll really put a pin in the map, as it were, in terms of these kind of scale of assets being available in West Africa. There aren't many of them, and our business model is a little bit different from many companies that are listed. We're actively and openly in the business of monetizing projects. We don't necessarily intend to build a mine, although our chairman is a mining engineer, David Netherway. He's been involved in a number of mine builds, 5 or 6 in his career, very successfully. We want to monetize that asset when the time is right and we can remain a shareholder of it. But ultimately, we'd like to retain a royalty on those projects and give our shareholders those long-term option value or returns from the success of those assets. But that's one that's probably going to drive some news flow over the next quarter, but it'll be quickly followed up by our progress in Egypt. And I'd like to think that as I mentioned, the Centamin history and how that delivered fantastic returns for London investors, that those same investors will see what we're doing in Egypt and see many parallels. And hopefully, I expect to get quite excited about what we're doing there. So focus initially Diba and then Egypt coming on the rails.
As a company, how do you sort of assess some of the projects that you've obviously taken on? Is there a sort of main catalyst or criteria for moving forward with a chosen project?
It's a really good question. I'd have to divide the answer into two. One in terms of our project royalty generation activities. We've got obviously a very strong technical team from the board down, really. And the key driver is prospectivity. If my first boss, Dr. Tom Elder, taught me quite early on that the biggest risk of a junior exploration company is the failure to find anything. If you're not going to find anything that's economic, then it's a completely fruitless exercise for your shareholders. So you have to make sure you're going to find something. Then you have to make sure that you can operate in the jurisdiction. Now, that means to some companies, the bar is quite high, that there are some places that they just won't operate. And the places that they will operate tend to be quite fashionable, and it's difficult to get land there. Because of our team's background experience, 20 years or more in Africa, we're very comfortable in many jurisdictions. So we have a different threshold, and we can assess political risk through our network, understand what's actually driving the politics in the country, what the direction of travel is likely to be for the next 5, 10, 15 years, and make a judgment call on that. So really it comes down to prospectivity, and then the availability to get ground, and the judgment call you make in respect of the security of tenure that you've got. And the team at Altus has got a fantastic track record, really, in terms of staking licenses and making discoveries, but be it for example, back in the day on the Encoot iron deposit, that led to the Pacula iron ore asset, which is next door, held by Altus. Currently, we made a bauxite discovery at Bursock, transacted with an Australian company called Canyon Resources. David Netherby, our chairman, joined their board. They've gone on to take on the Minim Martap asset next door. It's a world-class bauxite deposit, and we own a royalty on the Bursock asset next door. And we also have 26 million shares in their company. And our investment in that whole process was maybe $150,000, and we got that paid back in cash within a year, kind of thing. So that was a good example. Ethiopia we went into, made a number of really good discoveries, gold and copper discoveries in the North Tigray region. The politics there has changed. Unfortunately, it's a very difficult place to operate. So we've pulled out for now. And in Mali, it's been non-stop success, I would say, really, in terms of what we've been doing, identifying those assets. When we did our transaction with Legend Gold, we felt there was really good value in them. The market wasn't ascribing any value to it. To be fair, it wasn't ascribing much value to anything back then. But those assets have gone on and delivered fantastic returns for our shareholders. And likewise, you could say that with Morocco, where we have a portfolio. We've announced just before Christmas a transaction with a group called East Inco, listed on the Aquis market. They'll be going to the standard listing and potentially changing their name to Aterian, which is the name of our subsidiary that's focused on Morocco. They're a very good team. They've got assets in tantalum in Rwanda that they're putting in with our Moroccan portfolio. And we discovered very quickly the Altus copper silver asset in Morocco. Looks very attractive. It's just over the hill, literally, from an active copper silver mine managed by the State Mining Company. And then hopefully taking that forward to Egypt. We've done some reconnaissance work on our licenses that we staked using satellite imagery and other techniques, historical data sets, to focus on the areas we wanted. Very quickly, we found hard rock gold workings. So in terms of bang for buck, our shareholders are getting fabulous exposure. You couldn't do this business model necessarily in North America, where you maybe have glacial till. It's less easy to acquire prospective ground for obvious reasons. They've got a 150-year history of staking ground and doing exploration. So Africa is a treasure trove from that respect. And we've proven that, but a lot of it does boil down to the team we have here, the technical team, and the economic eye. They're not, as it's been said before, this is not a science project. Everything has to make sense, or we drop it and move on. On the royalty side, it's a bit different in terms of how we assess the sort of the projects that we're going to go after. We probably have in front of us right now maybe a pipeline of 10 royalty transactions that we're looking at under sort of NDA relationships. And we take a view in terms of what we think the return is going to be from those projects. And some of them are in production, some of them are a long way from production. So you have to wait what your confidence is that those assets will one day generate you a return, and what the scale of that return is going to be. So it's a bit more of a balance sheet exercise in that respect. And as we're building a portfolio, you want to blend it in terms of your jurisdictions that you have exposure to, and in terms of your cash flows, the run rates, as it were. So there's a few more considerations. Alistair Hume, who joined us just after La Mancha in 2020, has been doing a great job assessing these various royalty deals. He's been working many hours of the day and continues to do that. And as I said, just recently, I'm convinced that we'll have more transactions to talk about over the course of the next few months.
Yeah. And is there a preference for, as a company or maybe yourself, looking at early stage projects or projects that are already in production? Obviously, there's benefits and negatives with either. But
Yeah.
is there a particular preference for yourself or the company?
It's a how long have you got?
Or a case by case basis, I take it.
Yeah, I mean, I guess you can look at it. It comes down to portfolio construction. If you were purely focused on early stage, which is not a bad strategy, then your shareholders know that it could be a long time, and there's a high chance of 100% loss of investment. If you're focused purely on production stage assets, then your shareholders will know that they're likely to get a dividend, but it's probably going to be a margin above the cost of borrowing, and they have to take a view of whether they could get a higher return investing in a different situation. So they're looking for yield. Now, if you can do what Altus is doing and try and blend both of those, so in other words, you give your shareholders access to cash flow and to income and dividend, which reduces your downside risk, whilst offering them what are high risk opportunities in exploration, then we think you're really capturing the sweet spot. You're getting the best of both worlds, and the management team and the board at Altus own about 13% of the company. So you have to put on top of that the alignment of interests. If you've got a management team who are purely looking at exploration stocks and they don't own anything in the company, it's not their money. They will keep rolling the dice until they run out of other people's money. So it's important to make sure that when making investments, you look at that alignment of interest, I guess you can say. And I think we're very strong in that respect. But in terms of the actual model of where we look, it is a case-by-case study, but it comes down to portfolio construction. And are we overweight in terms of cash flow, or are we overweight in terms of a particular jurisdiction or a particular commodity? And we keep a very eagle eye on that. One of our directors is Robert Milroy, based in Guernsey. He's the lead independent director on a number of funds based there. He was the lead independent director effectively on the fund we launched that we listed in London, and he sat on that fund for nearly 6 years before he joined Altus as a director. He has a fantastic track record in all things asset management and brings a huge amount of that DNA into Altus. So it's an important part of what we're doing, and hopefully we're giving the shareholders the best of both worlds.
How do you see the sort of mining industry developing over the next sort of 3 to 5 years? And obviously, you're probably heavily involved in the gold sector. Just wonder if you can comment around that.
Yeah, it's very dangerous to make predictions. Yeah, it's very dangerous to make predictions, as we saw in late 2019. I think there's a few themes that at least today you can look at and try and opine whether or not they are long-term or short-term events, and you're likely to be right or wrong. We'll see. One of them is inflation. And there's obvious inflation. It's sort of 30 or 40-year highs, depending on which metrics you use or which ones you're allowed to use to make the calculation. And that is a change. A lot of people born in the last 30 years won't understand inflation. Maybe born in the last 40 years won't have had to deal with inflation in terms of what impact it can have, rising interest rates on mortgages and also the cost of goods. And the value of assets, or let's say the price of assets, probably a better way of describing it. Now, some commentators are wondering whether this is a transitory matter that's related to blockages to do with the COVID pandemic and it's supply chain related, and there'll be a surge or a release of capital once this is all behind us, which may not be too far off. And other people are saying inflation is a disease of money, excess money creation, of which there has been an unprecedented amount globally in the last 18 months. Really quite phenomenal amounts of money have been generated that have yet to be repaid. And therefore, one of the ways of repayment may take a form is through the rising prices and reduced supply, also in terms of the goods that are available. So I'd like to think right now that it's a bit of both. I think there's obviously a sort of a transitory impact from COVID. The world is readjusting back to what was normality, and that's going to cause some price movements. But I think also anyone that's been following the gold space for the last 10 or 20 years will appreciate this constant theme of inflation has always been talked about, that it's going to be a matter of time before it comes. Interest rates can't go down forever. I mean, technically, I guess they could, but our expectation was that normal economic policy would at some point return. It would be painful when it does, and they would only do that in response to some crisis of rising prices. And of course, inflation is a good precursor to rising gold prices. It's not necessarily 100% related, but one speaks to the devaluation of the currency. Perhaps you could argue it if you look at it that way, and the value of hard assets will go up, and gold is the ultimate hard asset. So there's a very strong case to say that an investment in gold should deliver a decent return, risk adjusted, over the next 2 to 3 years. And it might be that the gold price goes down in nominal prices, but actually the real return is up. And there's the sort of things that the market doesn't really follow greatly, but we think that gold is a great place to be for the next 2 to 3 years, whether it's transitory or not. And then I guess there's the other theme is the electrification. There's a huge geopolitical move towards sort of the electrification of the economy, and there's often seen through the lens of the Western world and what we can do in terms of electricity meters and installing sort of green energy through wind and solar and these kind of things, and can we drive electric cars and et cetera, but also you got billions of people in emerging markets who are also wanting to urbanize, which is going to consume large amounts of commodities that are also required in electrification, literal electrification of towns, villages, and ever-growing cities. So we're very convinced that copper and other the so-called battery metals will also have a very bright future. You've also got potential where those two themes coincide. Inflation can often impact on mine production, and you can see a situation where prices of commodities outside of gold, copper, start to go up because that's in terms of the margins, and the supply of the mines is going down. And you may get a perfect storm in that respect in terms of a commodity market run in prices to feed this green economy, but also reflecting the fact that you're now in a more inflationary environment. So we're pretty bullish on commodities broadly, but I think the key takeaway is our investments in gold and copper should serve pretty well.
What jurisdictions are Altus focusing on for sort of future growth? And is there any particular reasons why you might focus on a particular jurisdiction? And I'll take it mainly Africa, but maybe even outside of Africa.
Yeah, Africa's always been our focus. And the reasons are straightforward for us. The average depth of a discovery in Africa is about 9 meters below surface, whereas in North America, it's between 170 and 200 meters below surface. So you can usually find most deposits in Africa by looking at the ground. That means you can make discoveries really quickly, test them really quickly, and move on really quickly, and you don't burn through your shareholders' capital. So two great reasons to invest in Africa there. But we closed this royalty transaction on Caserones, which is in Chile last year, Q3 last year. And that was our first move outside of Africa. And it speaks to the fact that when you're looking at cash flows, you can be a little bit more ambivalent. In fact, you can be totally ambivalent, really. It comes down to the quality of the assets and the jurisdiction it's in terms of the security of your cash flows that you're going to get and how long it might go on for. Again, quality of asset, likely stability of politics. And we are therefore pursuing two effective strategies. The royalty generation business in Africa, big focus coming on Egypt, but Mali really right now perhaps. And then the royalty acquisitions, we have a global reach. So the Newcrest deal we closed at the end of the year did have the Bonaire asset in Ivory Coast, but it also had a huge portfolio of royalties in Australia. So we now have 23 royalties in Australia, 1 royalty in Chile. And future deals that we do, royalty deals, could as well be in Africa or anywhere else, as quite literally, obviously with a number of key exceptions. But a global reach in that respect comes down to quality of asset. But Africa's a key theme for us on the royalty creation business. Lastly,
what's the outlook for Altus over the next 12 to 18 months? And then after 18 months, we can do another podcast.
Excellent. Well, I look forward to the next podcast, that's for sure. I'm sure we're going to be just as busy as well as the last 18 months have proven to be. We have a number of deals in front of us, pipeline deals, I guess you could describe them on the royalty front, but speaking to those themes about electrification and the power and value of copper, maybe nickel to an extent, and also looking at the inflationary impact on gold and commodities more broadly. I think you've got a very exciting 18 months ahead of us, especially when you add in the theme of M&A, which is likely to start to happen. So we're going to push on with the Diba-Lekamfla project, as we're now calling it. We're going to update the MRE, update the PEA, get the market up to speed with what we have there. I think that a lot of people will then start to recognize it's a material asset, has a 1 million ounce potential, most certainly. We'll obviously advance what we're doing in Egypt. We're very excited with the ground we've got. We expect maybe to get more ground, and hopefully London investors will take a shine to what we're doing in Egypt, and could potentially see another way for a Sukari type asset to be discovered and another Centamin to come out of that. So hopefully, fingers crossed for us to do well there. And then on the royalty side of things, we have a number of transactions in front of us, as I mentioned, and I'd like to think we get one or more of those over the line and continue on this very aggressive growth path that we're on. I think the team here is growing. We recently announced the appointment of Michael Stark, who used to formerly be with SolGold and before that Standard Bank. So we're growing the team. We'll continue to look at deals. We'll continue to hopefully realize value for our shareholders, and maybe that all culminates eventually in the M&A that we talked about at the very beginning, and perhaps Altus will participate in some shape or form in that, and that's speaking to the alignment of interests of the management team here, the board with 13% of Altus ownership will hopefully ensure that we continue to do well by our shareholders and strike good deals. So very busy 18 months ahead, I fully expect.
Yeah, sure. It sure sounds it. Steve, really appreciate your time. Give us an update on Altus. Obviously, like I mentioned, you've done a lot of things over the last 2.5 years since we last spoke. And so hopefully over the next 12 months to 18 months, you're going to continue the success that you've had so far. So really appreciate you updating our audience. If any of them want to reach out to you, if they've got any questions at all, how can they go about doing that? Are you across any social media platforms?
Yeah, we're on LinkedIn, and obviously directly through our website. You can contact us. You can send an email to info@altus-strategies.com. I'll make sure I pick that up there. We're very, hopefully, I'd like to think, transparent and communicative with shareholders and investors when they approach us. And so far as we're able to within the securities laws, we're keen to ensure that shareholders are up to date and get a good interactivity with the board and the management team here. And we value that as much as hopefully they do.
Yep. Thanks again, Steve. And to the audience listening, that was an action-packed episode. Obviously, Steve covered a lot of content there. Obviously, told us a lot about obviously the royalty business, what's happening in Africa, and a lot of the projects they're involved in. And also, obviously, gave us an overview of what he thinks is going to be happening over the next few years. So really appreciate your time listening. Hope you can share this episode amongst friends, family. If you're watching on YouTube channel, appreciate if you can share this episode so it goes out to more corners of the world, and really appreciate your continued support. So until next time, happy mining.